Changpeng CZ Zhao has become the latest in a long line of crypto founders facing potentially significant legal consequences. The founder of Binance Holdings Limited, the world's largest crypto exchange, resigned from his post as CEO as part of a settlement agreement with U.S. prosecutors that includes the possibility of jail time that makes him the newest member of a club that includes Sam Bankman-Fried of FTX, Alex Mashinsky of Celsius, and Du Quan of Terraform Labs. Zhao, who founded Binance in 2017, developed a reputation for being a canny operator, a fierce competitor, and someone prone to saying things like, "I don't really care much about money," while amassing a fortune measured in the billions. Zhao's resignation and his near simultaneous replacement by Richard Teng, who built his reputation not in crypto, but at Singapore's central bank, is emblematic of the kind of shift and rich approach being pushed by regulators around the world. The landscape for digital assets appears to be shifting away from the wild west of crypto, populated by risk-loving cowboys who seek forgiveness instead of permission, who publicly spark with the liquidators attempting to recover assets for their creditors, or who use stolen billions to lobby for policy changes. The swelling ranks of crypto founders facing civil and criminal penalties around the world suggest governments are increasingly empowered to clamp down on bad behavior by digital asset influencers. Sam Bankman-Fried, the disgraced founder of now bankrupt crypto firms FTX and Alameda Research, known widely as SBF, was found guilty of 7 counts of fraud and conspiracy and facing decades in prison. And Bankman-Fried directed the transfer of FTX customer money into Alameda Research, an affiliated hedge fund for risky investments, political donations, and expensive real estate, before both companies collapsed into bankruptcy last year. Reeve 40x's crypto kids came dangerously close to upending futures. And if Terraform Labs co-founder Du Quan was accused by U.S. prosecutors of orchestrating a years-long fraud that wiped out at least $40 million in market value, he had carved out a particularly irascible niche in the digital asset industry. The collapse of his algorithmic stablecoin project, Terra USD, and its related token Luna acted as a major trigger for crypto winter that started in 2022. Quan was jailed in Montenegro on allegations of attempting to travel with a forged passport and had been considered a fugitive from fraud charges in his native South Korea. Second one has denied wrongdoing. Alex Mashinsky, the former chief executive of cryptocurrency lender Celsius Network, was arrested in New York in July on charges of committing wire fraud and other crimes. Mashinsky is accused of waging a multi-year scheme to mislead customers before the company he founded file for bankruptcy with more than $1 billion in debts. And prosecutors also accused him of pumping up the price of his firm's native crypto token, CEL. He has pleaded not guilty to the charges and is currently out on bail. His trial has been set for September 2024. The founders of Three Arrows Capital bankrupted their hedge fund with leverage bets that went south and, took a large chunk of the crypto market down with them. Liquidators are seeking to recover $1.3 billion from the pair who listed themselves among the creditors to their collapsed fund. Suju was detained in Singapore or trying to leave the country in September, or the precise whereabouts of Kyle Davies, who is subject to a similar order following months of sparring with the liquidators, are unknown.